Welcome to my channel. Today's topic is Cash Book. Cash Book is a book in which only cash transactions are recorded in the chronological order and cash receipts are recorded on the debit side. Cash payments are recorded on the credit side. Cash book is like a subsidiary book. Types of cash book. Simple or single column cash book means it has got only cash column. Cash book with cash and discount column is known as double column cash book. Cash book with cash, discount and bank columns is called three columnar cash book. Apart from the main cash book, petty cash book may also be prepared to enter the petty expenses, that is, expenses involving small amount. Okay, now let's see how to prepare cash book. Enter the following transactions in a single column cash book of Mr. Kumaran for the month of June 2017. So in this problem, they have asked us to prepare single column cash book. We already know that single column cash book is a cash book which has got only cash column. So now the first transaction is occurring on June 2nd. Started business with cash rupees 50,000. Okay, now what is the entry for this? When you start business, what is a journal entry? We have already discussed in the introduction part of journal how to pass entries for capital introduced, isn't it? So, when cash is introduced, what is coming into the business? Cash is coming into the business, isn't it? So, we have to debit cash account. So, cash account is debited. Then, capital account is credited. That is, Kumaran's capital account is credited. So, what is the entry? Cash account debtor to Kumaran's capital account. This is the entry, isn't it? So now let's see how to pass these journal entries in the cash book. Remember, in this entry, cash account is debited. We are going to open cash book. We have to see whether cash account is debited or credited. If it is debited, we have to write it on the debit side. If it is credited, we have to write it on the credit side. Simple. So, here cash account is debited. That's why I am going to write on the debit side of the cash book to Kumaran's capital account. Amount is rupees 50,000. So before preparing cash book, we have to write the headings as in the books of Kumaran. Debit, credit. So on the debit side, the headings will be date, particulars, RN, that means receipt number, LF, ledger folio, then amount. Again on the credit side, date, particulars, VN, then LF, then amount. So let's now see how to pass the first entry in the cash book. Again I repeat the journal entry for the first transaction. Entry is cash account debtor to Kumaran's capital account. Cash account is debited, so I am going to write it on the debit side to Kumaran's capital account. Amount is rupees 50,000. Date of the transaction is 2017 June 2nd. So in particulars column, to Kumaran's capital account. Amount is rupees 50,000. Okay, the next transaction is on 8th June. Paid rent in cash rupees 4,000. Okay, what is rent? Rent is an expense. Salary, rent, all these are expenses, isn't it? Insurance premium paid, all these are expenses. Now, we already know that according to the nominal account rule, we have to debit all expenses and losses. Rent is an expense, so we are going to debit rent account. And when you pay rent, what is happening? Cash is going out. In other words, decrease in cash. So, cash account should be credited. Now, let's see how to pass the journal entry for this transaction. Rent is paid. So, what is the entry? Rent account debtor. Isn't it? Then, what is happening? Cash is going out. So, to cash account being rent paid. Okay, now we are opening cash book. So, we have to see whether cash account is debited or credited. In this transaction, cash account is credited. So, we have to write it on the credit side by rent account. What is the amount? Amount is rupees 4,000. Okay, let's see how to pass this entry in cash book now. So, date of the transaction is June 8 by rent account. Amount is rupees 4,000. Okay, the next transaction is on June 10. Purchased printer for cash rupees 7,500. We already know that purchase is an expense. But what we are purchasing here? We are not purchasing goods. We are purchasing printer. So what is coming in? Printer is coming in. So we have to debit printer account. When we make purchases, what happens? Cash goes out. So we are going to credit cash account. So the entry is printer account debtor to cash account. In other words, there is a decrease in asset. That's why cash account is credited. Cash account is credited. Whereas printer account is debited because it is an asset. Debit what comes in? Asset is coming in. So we are going to debit printer account. Now let's see how to pass the entry for this transaction. Entry is printer account debtor to cash account. Amount is rupees 7,500. Then date of the transaction is June 10. Here cash account is credited. So now I am going to write it on the credit side of cash book by printer account 7,500 rupees. So on June 10th by Printer account 7,500 rupees. The next transaction is on 11th June. Cash purchases 15,000. So what is happening here? We are purchasing. So purchase is an expense. Purchase account debit to cash account. Why cash is credited? Because when we make purchases, cash is going out. That's why cash account is credited. Amount is rupees 15,000. Now let's see how to write the journal entry for this transaction. So the entry is purchase account debtor to cash account. Amount is rupees 15,000. Date of the transaction is June 11. So, in this entry, we know that cash account is credited. So, I am going to write it on the credit side of cash book by purchase account 15,000. June 11 by purchase account 15,000. Next transaction is on 14th June. Cash sales. Okay. We already know that from the introduction part of journal entry that sale is an income. According to the nominal account rule, we have to credit all incomes and gains. That's why sales account is credited. Okay, now let's see how to pass the journal entry for cash sales of rupees 10,000. Date of the transaction is 14th June. When we make sales, cash is coming in. So cash account debtor to sales account because sale is an income. Amount is rupees 10,000. In this entry, cash account is debited. So I am going to write it on the debit side to sales account 10,000. Date of the transaction is 14th June. To sales account 10,000 rupees. The next transaction is on 17th June. Commission received in cash. Okay. When we receive commission, what is coming in? Cash is coming in. So we are going to debit cash account and credit commission received because commission received is an income. We have to credit all incomes and gains according to the nominal account rule. The entry is cash account debtor to commission received account. Date is 17th June. Cash account debtor to commission received account. Amount is rupees 6,000. 6,000. Okay, in this entry, cash account is debited. So I'm going to write it on the debit side of cash book to commission received account rupees 6,000. Date is 17th June to commission received account rupees 6,000. The next transaction is on 19th June. Interest paid for loan in cash rupees 2,000. We know that interest paid is an expense, isn't it? So we have to debit interest paid account and credit cash account because when we pay interest, what is going out? Cash is going out and interest is an expense. That is, interest on loan is an expense, isn't it? Okay, now let's see how to pass journal entry for this transaction. Amount is rupees 2000. Date of the transaction is 19th June. 19th June, interest is paid. So, we are going to debit interest account debtor to cash account. Amount is rupees 2000. So on the debit 2000 rupees and on the credit side 2000 rupees. Okay, now in this entry cash account is credited. So I am going to write it on the credit side by interest account 2000 rupees. Date is 19th June by interest account 2000 rupees. Okay, the next transaction is on cash withdrawn for personal use 3000 rupees. So, whenever cash is withdrawn for personal use in accounting, we use the term as drawings. So here we are going to debit drawings account and credit cash account because cash is going out of the business. Date of the transaction is 20th June. So 20th June, drawings account debtor to cash account. Amount is rupees 3000. In this entry, cash account is credited. So I'm going to write it on the credit side of cash book by drawings account 3000 rupees. Remember, this is debit side, this is credit side. So on 20th June by drawings account. Amount is rupees 3000. The last transaction is on 21st June. Paid post charges in cash rupees 3500. Post charges are expenses. So it should be debited. It is debited as per the nominal account rule. Debit all expenses and losses. So when we incur expense, what is happening? Cash is going out. In other words, there is decrease in asset. That's why cash account is credited. So the entry will be post charges account debtor to cash account. Amount is rupees 3500. Date of the transaction is 21st June. By post charges account. Amount is rupees 3500. Okay, now we have entered all the entries in the cash book. Now what we should do? We should total on the debit side and total on the credit side. So let's see what is the total on debit side first. So when we total on the debit side of cash book, we get the total as rupees 66,000. Okay, so when we total on the credit side, let's see what is the total. So on the credit side, we get rupees 35,000. On the debit side, we get rupees 66,000. We have to write the higher total on debit side and credit side. So the higher total is 66,000 rupees. So now I'm going to write the higher total on debit side and credit side. Higher total is 66,000 rupees. The total on the credit side is rupees 35,000. So the credit side has got lower total. That's why balancing figure will come on credit side. The balancing figure is 66,000, that is the higher total, minus the lower total 35,000. The balancing figure is 31,000 rupees. This 31,000 rupees will be shown on the credit side of cash book. Why it is shown on the credit side of cash book? Because the credit side has got lower total. Now we have to write 30th June by balance carry down. What is the balancing figure? 31,000 rupees. This balancing figure will be carried forward to the next month. That is July 1st by balance brought down. What is the balancing figure here? 31,000. This will be brought forward. 31,000 rupees. Thanks for watching. Please do like, share and subscribe.